which is basically it's the basic Fibonacci pattern. It's an emerging pattern, but saying that once it finishes its bottom here, that these areas here, this blue line at this level here and these certain levels, it projects where this market could go to. Okay, this is a 2.618 level, a 1.618. We also have another Fibonacci level, and here's all these levels are identified here on this column or down this side of the chart, and it's also extended out throughout the screen, and you can see that there's these price levels are identified. So when the market does become a completed pattern, you can easily see the target prices that it's giving us. All right. Now, a shortcut that you could take when dealing with these patterns is you could go to the Autochartist web-based platform, and you could go down to scripts in this section here, and you can click on scripts or this Autochartist, and what it does is it gives us the traditional look for the marketplace. So as you can see, I was trying to find a Fibonacci pattern. So what you can do to save some time is, so we're waiting here for this to load up. Okay, this is going to load up with our price data. What we could do is we could go to Fibonacci patterns on this screen here, and I can go to FX majors, which I've been looking at, and I can look here to see if there's any fresh patterns. You can see it's one of those days where there's only really one fresh pattern, and it's the New Zealand dollar, US dollar. You can see the date is October 21st. Okay, this one on this screen is giving us a projection of where it can go to, for example, up here. Now, if you only see one market identified on this screen, you can go back to the MT4 platform, and you can take a look at that one that's been identified on the web chart, on the web platform, and you can begin to watch it. So there's a little bit of a trade-off there. You can have both open at the same time. If you're comfortable making that transition between looking at the traditional web platform and then switching back to the MT4 platform. As I said before, it's a seamless move from one chart to the next. Okay, now in addition to the chart patterns and to the Fibonacci patterns, we can also look at a power stats indicator. Okay, so we're going to take out that Fibonacci pattern right now, and we're going to take a look at the Australian dollar here. So we have the Australian dollar, and we're going to look at the Australian dollar on a 60-minute basis. So here's H1. I click H1. These are all your time periods up here if you're familiar with the basic MT4 platform. Then what we're going to do here is we're going to drag in the Autochartist chart pattern, and we're going to click this on here, okay. And again, it's going to go through its process of authenticating and connecting. And we should be getting a pattern here in a second. And there it goes. So you see this area here is where we had a triangle pattern earlier today on the hourly chart. Okay, resistance line, support line, and in this case we broke out to the upside, and we again hit our target zone. So earlier in the morning when I was looking for chart patterns, all of these were just beginning to break out. Of course, 2 hours have gone by, and the market has continued to move. So we've hit our target zone here. Now, whether this market goes beyond the lower level, the upper level, we can get some help by looking at this Autochartist power stats custom indicator. We can drag this in here, and what it's going to do is make sure it got in there. Let me check my indicators list. You can see in my indicators list I have chart patterns and power stats. Okay. So what we're trying to do, it's waiting for the data here. It's going to give us some levels on the side here. that, based on historical volatility, become areas for suggested stops or additional targets. So it's taking a little bit of time here, but it should be coming up. Still waiting for the data here. Because a lot of times what happens is you get your target identified, and you may not be the type of trader who wants to get out the first time it hits there. Okay, that you may want to be one that wants to figure out a way to play the market for even more to the upside, especially since we've had the sideways action all week. You're finally getting a breakout, so you basically are telling yourself, what's the point of getting out? We're finally trending. Why do I want to cut off a trade that's working just because it hit a target price? So you may want to play a little bit with the market's money by staying in the move. And so what you can see here is, in these areas, Autochartist power stats, again, as I said, is based on historical volatility. Since we're working with a 60-minute chart, we want to look at areas where the market could go. So here's a line here for 60 minutes. Okay, this is projecting that we have a 102.66. You can see it popped up here when I touched the line, a 102.66. This is saying that this market, based on historical tendencies, could break back to this 102.66 area. Okay, now you could be asking yourself, should I get out? Because if it does fail in this target zone, there's quite a bit of a give back here. Okay, now at the end of the hour, this is going to move, so it may show you a point where you could trail it. Now also up here, it's covered up by the box, because it looks like not only did the target price did Autochartist come up with a target price, but it looks like it fits in with the historical volatility also. So both of these areas overlap. So you can see this little green line here, this green minutes, that the 60-minute and the 240-minute overlap this box. So by my experience is that that's a pretty valid target. When you can have two independent ways to look at a target and have the market hit there, it's sending up a red flag that perhaps this is going to be a very strong resistance zone, and that perhaps you should think about getting out of the market there. And again, throw in the fact that Autochartist has got this area down here. You have quite a bit of give back. You can see this space in here. So this is probably not a bad idea to consider lightening up in this area, or perhaps exiting the position altogether. So that's an example on how you want to use the chart patterns, this chart pattern, target zone, with the Autochartist power stats. Now we'll take out this power stats for now. We'll get back to that in a second. Another market that was moving today, usually when you have a theme in the market, if you're going to be trading, for example, if you see the Australian dollar going up or the euro going up, it tends to be what they call a risk-on day, meaning that traders are looking for risky assets. And that tends to mean commodity-linked assets, such as Canadian dollar, New Zealand dollar, Australian dollar. Okay, and that's the theme today. There seems to be some strength in the euro, and it's spreading to the commodity-linked currencies. So when you see a move developing like that, you can look at a market like the Australian dollar, and you'll see that there's buyers in there. So at the same token, we can look at the U.S. Canadian dollar. Okay, now this is going to be an inverted move. So in other words, the dollar, U.S. dollar, is getting weak. So we should see a breakout to the downside. Okay, we're requesting data. We'll be authenticating it, and we should be showing a chart pattern. Yeah, and you can see that this too was a wide triangle forming, and the market this morning broke through the support line. You can barely see it here, but there's a target zone way down here under $1.35. So there is plenty of room to the downside. So this move is just beginning. Okay, So we're looking at the potential of a pretty large break in the dollar, Canadian dollar. Okay, so that's another example of a market breaking out of the triangle. You can also see that in these quality indicators that there's quite a bit of our high ratings going on. You know, we have high quality rating, high initial trend. We have a little bit of below average breakout rating, but you can see that there's follow through, so it's a pretty powerful move. Okay, I hope you've been following along, because you can see that I've tried to keep it simple. Yes, Yvette?
I was just wondering, are there any conventional technical indicators that work well with the Autochartist platform, such as volatility or momentum?
Yeah, what I like to do is, because you're working with a dynamic platform, when you're working with, switch back to this, when you're working with this platform here, the web-based platform, I get a lot of questions that come up from traders, and they ask, for example, can I change from candlestick to bar chart, things like that. This is a solid platform. You can't make any changes to it. You can see that there's projections with arrows, and there's gray boxes, and there's numbers, and everything that you really need to trade. You have target zones, you have support and resistance identified, but you can't really add anything to it, like volume or a momentum indicator or volatility. And those are some of the tools that traders like to use in conjunction with the pattern recognition. So you remember that when you're dealing with pattern recognition, you're dealing with a hope or a theory that traders or big money are going to follow that pattern, because you alone, let's face it, we're all too small to really move a market. But if there's a good pattern developing and it's over time, then chances are that we're going to see a pattern in an institution, or some big Forex dealer is going to see the same pattern, especially if it's developed over time, like in this case, a 98-bar pattern. So in order to help us with that pattern, I like to look at other indicators, especially the momentum indicators. So in this case, I like to look at the average true range. Okay, and what that represents is it takes a period of time. In this case, it's an ATR of 14. It looks at 14 bars back, and it looks at what the true range is in that marketplace, and places them in an average, and it gives you an oscillator here. So you can see up here there's periods of high volatility, and then down here there's periods of low volatility. So if you become an expert at studying volatility, you know that that's how it moves. It tends to what technicians call regress to the mean. So at times you're going to have a very highly volatile market, and times you're going to have a very low volatility market. But there's a regression to the mean at some point. And when you can catch a breakout when volatility is low, okay, that's basically pinpointing or telling you that there's going to be movement, okay? Especially when you're working with a triangle pattern. I know this is kind of wide, but a lot of times it'll extend out, and where these two lines compress the market, and it basically telegraphs that it's going to move, that there's impending volatility, something's going to happen. And if you combine it with an indicator like the ATR, when it's at an extreme low, so when you get this period here, like where it's sideways, this is sucking all the volatility out of the marketplace. Okay, and as the volatility gets low, it basically is telling you something's going to happen. And if you combine it with a breakout pattern like a triangle, this gives you the direction, and this tells you that volatility is likely to pick up. So that helps support this trade, the premise behind this trade, that we're going to get a breakout, and then this is telling you that it's likely to begin to move pretty fast. So I like to combine anything that indicates volatility or movement with my chart pattern.